Hello, I'm back. Brian Harris with Harris Mortgage in Ventura, California. I say I'm back because I made some videos a couple years ago. If you saw any of those, hello. If you didn't, nice to meet you. What I've started, this is the first video in a series of I'm going to call monthly mortgage updates. This will be your May mortgage update. So without further ado, let's get started. Actually, before we start, quick little compliance message. This is not a rate quote in any way. I'm going to provide some rates and payments, and it's not a rate quote. It's not, I'm not including closing costs or expenses, and you may not qualify for a mortgage. But so I'm just wanting to provide some information, but I don't want to get busted. So this is the compliance message that this is not a rate quote in any way. Thank you. First thing we'll go over each month is mortgage rates. And we're going to look at this chart. I'll put it on the screen now. We're looking at rates from one lender. So I'm not searching all lenders, try to find the lowest rate and put it in a chart. This is one lender's rate. So what's going to pop out at us is the trend and where rates are going. And right now they're up. If you've read the news at all, interest rates are going up. Late 2021, which this chart grabs, rates were in the twos. They were just hanging on to the twos. And beginning of the year, we popped into the low threes. We had rate increases in mortgage rate increases in January, more in February, March, and last month in April. We're now up for conventional loan 2.25% from the beginning of the year. Now, the Fed has increased rates 0.25%. So we're going to talk about that in a second. But mortgage rates for 30-year fixed have increased approximately, because it's not a rate quote, 2.25%. Or if you're looking at FHA loans, 2%. So government loans about 2%. Conventional a little more. Again, this is just one scenario, not a rate quote, but as you can tell, rates are increasing. Next, I want to bring the rates to life by showing you an example of what a payment would look like. So for the conventional loan, $700,000 purchase, you can pause this if you want to really digest it, but it's going to be 20% down, $140,000. So this is probably someone who is moving up. They've sold a house, have equity to put 20% down, or they're just great savers, or they have some parents who want to give them a gift. But a lot of people don't have this nest egg to put down. If you do, this is what your payment's going to look like. Generally, it's not a rate quote. Next, FHA. Same idea, not a rate quote. Hit pause if you want to digest it. But we're looking. What's nice about this FHA loan is that it's just 3.5% down. So $600,000 purchase, 3.5% down. Payments over $4,000. But yeah, you're a homeowner. Okay, every month after we go over rates, we're going to just go over some topic. Sometimes it might be one topic, might be three, might be four. My goal is to keep these short and sweet. So hopefully it's not more than four. But what we're talking about today is the Fed meeting, self-employed borrowers, and second home. So for the Fed meeting tomorrow, Fed's going to increase rates 0.5%, 50 basis points. How do I know that? I don't know that for sure, but it's just widely discussed that that's sort of what's going to happen tomorrow. So I'm going to get several phone calls, and they're going to say, Brian, I saw mortgage rates went up 0.5%. Great. And I'm going to say, well, that's actually good news, not true. So, the Fed controls the very short-term rates. They influence mortgage rates, but not directly. So if the Fed increases their federal funds rate, very short-term money, 0.5%, that does not mean the mortgage rates will increase 0.5%. And you can see this because, like I just said earlier, mortgage rates thus far this year have gone up 2.25%. Fed funds rates have only gone up 0.25%. So you can see they're not tied together, dollar for dollar. The stock market and the bond market are forward looking, and so they've absorbed the information that's available. So right now, information is that the Fed will increase rates 0.5%. So that's baked into today's mortgage rate. So tomorrow when that announcement's made, mortgage rates really shouldn't change. But after the announcement, there's going to be an interview, and Jerome Powell, Fed chair, may provide new information that kind of tip their hat of like how aggressive they're going to be. And so that could impact rates for better or worse, or for higher or lower. But just the fact that they're increasing rates 0.5% tomorrow is not going to directly increase mortgage rates. Next thing to talk about, self-employed borrowers. So through COVID, there were additional requirements self-employed borrowers needed to fulfill for mortgages. We really put them through the ringer. So Fannie Mae, Freddie Mac came out. We need to see your bank statements. Then we're looking at your deposits, and we're looking at your expenses, and we want profit and loss statements. So blah, blah, blah. We needed additional documentation. There was additional requirements. Fannie Mae, Freddie Mac have removed the additional COVID requirements on self-employed borrowers. So self-employed borrowers now applying have an easier underwriting process. It's still not a walk in the park. You're self-employed, so we're going to need a lot of information. We're going to need your tax returns, but we're not going to be quite as intrusive as we once were. So that's, in my opinion, very good news. Last thing to talk about is second homes. Now, buying a second home, interest rate wise, used to be very similar to buying an owner-occupied property. So very favorable low rates, as opposed to higher rates for an investment property. So now a second home rate is very close to an investment property rate. So they've gotten more expensive. And you can see here these numbers on the screen, just zeroing in on one scenario. For a 10% down purchase of a second home, you used to have to pay 0.25%. There's a loan level price adjustment, or an extra cost of 0.25%. That's not to the rate, it's a cost, a percentage of the loan amount. I don't want to get into the details here, but just to tell you, now the loan level price adjustment is 4.125% for a second home with 10% down. So it's significantly more expensive. So if you're buying a second home, this is bad news. But if you are trying to buy your first home, or just a move-up home, if you're an owner-occupied purchaser, this is good news because it makes those people competing with you. Maybe if you're going to put that offer on a second home, think twice. So this change was made by Fannie Mae, Freddie Mac in order to help owner-occupied purchasers. So wanted to make it more difficult for, I guess, second home buyers. So a lot of people were buying these second homes, doing VRBO or Airbnb, and that's more expensive to do today. And you know what? I think we're done. I'm trying to make these short and sweet. So every month, check in. It's going to be at the very least just a rate check-in update, not a quote. And then I'm also going to talk about a couple timely topics. Respecting your time, I'm going to make them short and sweet once again. Thank you so much. Have a great day and see you next month. Bye now.